Investors, welcome back to Green Money Momentum. I'm your host, Trevor, and we are here live once again for the FOMC decision. So a big day within the markets. We have this coming here in just 10 minutes. So we're going to get the official announcement on whether the Fed is going to cut, whether they are going to hike, or whether we are going to remain at the same spot and have another pause. So we are going to have that here in 10 minutes. And then right after that, about 30 minutes after that, we are going to have the press conference with Jerome Powell. We are going to be live for both. So we are going to see the live reaction that the markets have to the decision. And then shortly after, we will watch the live stream. We will watch the press conference and see what Jerome Powell has to say. If you've never been a part of one of these events, there is always a ton of volatility associated with the FOMC rate decision. You have the initial announcement. You see how the charts initially react, a lot of volatility. And then right after that, you get the good afternoon. And then Jerome Powell talks all about the economy and why the Fed decided to do what they do. So I want to start out here with this meme because I think this is so funny, and this just shows what has happened so many times with this exact event. So there is so much volatility. At times there could be a big drop or there could be a big jump, but we'll watch this clip. If this is your first time ever attending one of these events, this is what it may look like here in about 10 minutes. So we have the audio cut off here, but Jerome Powell on screen is going to say good afternoon, and then you'll see right here the big drop in his portfolio. And this is a meme. This is a joke, by the way. This is definitely a trading replay, but it really does show what this event feels like, because so often Jerome Powell and the Federal Reserve will disappoint the markets and not give a rate cut. And we have talked so much about the rate cuts on this channel and how important they are for the markets. The markets nowadays really move so much off the M2 money supply. So all the cash in circulation, and then also the interest rates. You know, the economy, the stock market in general really does perform better during lower interest rate environments. And so we started to officially see QE once again at the end of 2024. We did see 3 rate cuts in 2025, but thus far the Fed has been pretty slow with the rate cuts, just a quarter point at a time. And with this meeting today here, we'll get the announcement again in 9 minutes. With today, we are not expecting a cut. So the odds right now of a cut are at 0%. The likelihood is that we get a no change. So we just get a pause and going on to the next meeting, which is going to be in April. And with the Federal Reserve, many are excited for the end of Jerome Powell's era, because this meeting here in March and April, this should be the last 2 times we see Jerome Powell as the federal chairman. And then we will get Kevin Warsh into the place of Jerome Powell. And expectations are that we are going to see more QE with Kevin. So when we do look at how the markets have reacted today, both the S&P and the triple Qs are in the red. And we have been seeing a lot of bleeding across the entire markets. And so we have had a pretty volatile day. And to the downside, let me refresh this heat map here. So we have 66% in the losing category. Most of the heat map here is red. And this is exactly how these days always look when it comes to trading or investing going into the big Fed decision. I recommend, again, never financial advice, just my opinion, but I recommend waiting and seeing what will happen, because again, the markets react with such a knee-jerk reaction to what the Federal Reserve does. And so I had one more thing of key data here. This is where we will watch the live press conference later. Oh, also, we did get PPI numbers today. So we did get the inflation numbers for the producers. And just like this reads right here, the wholesale prices rose 0.7% in February, much more than expected, and up 3.4% annually. Ouch. The key points here: the producer price index, a measure of pipeline costs that producers receive for their products, increased a seasonally adjusted 0.7% on the month. The core PPI was up 0.5%. So this is not positive to see. We know with the Federal Reserve, they have a dual mandate of maximizing employment while also keeping stable prices. And so with this right here, this is showing that the prices are not the most stable, and the odds of the Fed cutting were already shot. We already had a 0% projection going into today, but now the projections of it happening are probably even probably even less likely. Getting a little bit tongue twisted there. But with that being said, the odds were already so low. I do see there possibly being a little bit of a knee-jerk reaction to this, maybe to the downside if we get what is expected, a no cut. If we do get the Fed actually cutting, doing something stimulative, or we get some dovish remarks from Jerome Powell, we could see a massive jump. But if the news is disappointing, I could expect some more downside, but I don't think it will be too awful. I have seen interest rate decisions in the past, which I believe are a lot more volatile and mean a lot more. But right now, it's already not expected that the Fed will cut. Also, to everybody who is here in the live, as always, I appreciate you for being here. In just 5 minutes, we should see a big reaction in the markets, and then we will see what the decision will be. We got Two Wheels Pursuit here, sent this before we actually started live today. So I saw this a couple minutes before we started. He says, let's get this party started. I agree. Let's have a party with Jerome Powell. Lord Powell put extra starch in his shirt last weekend, so it would be ready for today. That is funny. I love the comedy there. My Lord Powell, how much longer will everyone be broke ass little bees? Well, the economy moves so much off of what the Federal Reserve does. When we look at, types of economic theory, you have classical and then you have Keynesian, and we are in more of a Keynesian type of society right now where everybody wants lower costs. We all want lower borrowing costs, but recently we have seen inflation rising and we have been seeing the rates stay at the same spot. So a lot of pressure has been building in many different areas of the economy. The housing market right now is elevated. Stocks are a bit elevated, but they could go higher if the Fed does cut. But right now they have been a bit stagnant, and many are just in a spot of fear, not thinking that the Fed is going to do more QE. We are in a very interesting position right now with the new federal chairman coming in very soon, and with our president wanting rate cuts. So hopefully your Lord Powell does something so we're not all broke asses anymore. Also, with this decision, I do expect for Donald Trump to take the opportunity to say something at Jerome Powell. If I had to bet, I believe it's going to be something negative. Even if somehow we get a rate cut, the Fed would probably just do a slight rate cut, and Donald Trump most likely will come on to Truth Social and will say something about too late Powell and how he is messing up the economy. And if the Fed doesn't cut, he is definitely going on Truth Social and talking trash about the federal chairman. Can we just start with the helicopter money now? I like that word, helicopter money. Yeah, it's like when it does come to QE, some call it the money helicopter, or, others even say it's the great melt up because of how stimulative things are. And if you were in the markets back in 2020 when the Fed did a lot of QE, you know exactly how amazing it is because the M2 money supply is rising. There's a ton of liquidity in the markets, and that is when you could see some massive gains. So Two Wheels, I agree. I definitely want to see the money helicopter back again. Go Trevor, go Trevor. Ollie, thank you for being here once again. Jerome Powell has a lot of nerve standing at the podium and lying to us all. When it comes to everything with the Federal Reserve, when it comes to the economic calendar, we have nothing but lies. It would be amazing to be an insider, wouldn't it? Where you could actually know exactly what is happening, because even with the statistics that we get from the Bureau of Labor Statistics, these are so often revised down in the future. So whether the numbers are positive or negative when they initially come out, including today's PPI, they will often be revised a year later, showing that the statistics were actually worse than were projected. So it's funny because we get all these different catalysts in the market, we get all these different reports, but again, so often they aren't actually even accurate. And it's just funny because you're talking about lies, and I agree. That's just, we are fish on the outside of the bowl looking in, hoping for the best, trying to prepare ourselves, read into everything. But that is the way it is, when it comes to the federal chairman, the president, the statistics, a lot of lies altogether. Will his replacement be any better? There is some fear, uncertainty, and doubt with Kevin Warsh because many look at his past when it does come to how he feels about, the economy. And he has been more of a hawk. So he has wanted more QT in the past and less QE, but he is handpicked by Trump. So many are uncertain about how they feel about this. I am hoping that he will be better than Jerome Powell. Hey, we got Chrisun the mama. Hello, my green brothers and sisters. Thank you as always for being here. Chrisun, you have been a big supporter of the channel. Great to see you here for the FOMC decision, which will be coming in 2 minutes. Did anyone else make any profit on Data Vault today? No, I did not personally. I see that Data Vault is a penny stock. I believe that you mentioned it in a stream, one of the ones that we've most recently done. And I'm just not in Data Vault myself, but that's just because it is a penny stock. It just doesn't meet my criteria for trading. But if you made a profit, congratulations. And I'm not saying that all penny stocks are bad, just not really what I like to trade, not what I feel that I'm an expert on. I see that they're up today. I am not in Data Vault. I'm going to give it a good look over. Yo, what is up? Amir, welcome to the live stream. Hello, Chris the mom. Hi, Trevor and everyone. Hello, Rhino Skin, Scary Numbers, and hello, Two Wheels. Everybody greeting each other. That's great to see. I absolutely love doing this. I really do this for the passion and for everybody who is here. Right now, we just have 6 viewers, but I want to say to all 6 of you, I really do appreciate your support. I've seen a lot of you in many of my different live streams and my comment sections, and seriously, from the bottom of my heart, I really appreciate it because in the short term, YouTube has not been recommending me the most, but it's you loyal subscribers that keep the channel going and do help to show YouTube that there is some value with my content. By the way, right now it is 11 o'clock Arizona time, 2 p.m. Eastern time. So it looks like we are seeing some volatility towards the upside right now. The markets are reacting to what the Federal Reserve just announced with the decision. I want to see if we get some more movement here. Very volatile here in the short term. We'll take a look here to see what the FOMC has officially announced. And I agree, we are missing Norris here, but boom, look at that right now, a positive reaction. So let's see. I believe, and I haven't seen the data yet, but I believe we most likely just got a pause. Let's take a look here to see what the decision actually came in. And Rhino Skin, hey, keep up the good work, Trevor from the United Kingdom. Hey, that is great to hear. We have some other viewers from the United Kingdom. We have people from Asia, from the United States, from everywhere. So that is great to see that you are from the United Kingdom. Rhino Skin, what time is it in your area right now? I would be curious. And let's see what the Fed has officially said. So let's just refresh here and see if we've gotten some more data. Let's take a look here. Sets to hold rates steady. That was actually released 21 minutes ago. Federal Reserve expected to hold rates steady. Again, that is the expectations. Let's see on CME Group if there has been any change. And 6 p.m. Okay, so we're in much different time zones. Right now, it is 11 a.m. Isn't that crazy how that works? I have a friend out in the United Kingdom. I'm going to be meeting him later this year in Vegas. And I am so jealous of you guys in the United Kingdom having access to the markets later in the day. I would love if it was 6 p.m. right now. Right now at 11 a.m., it's not too bad. But, I like the East Coast being back a little bit further. And then with you guys out in the United Kingdom, that is so nice that you don't have to wake up super early because the market's out here open at 6 a.m. So it does look like now the bears are taking control of the candle. Let's see who wins here. Right now, we are just flat. We have a big wick here. So it doesn't look like the bulls or the bears are taking control here on the 5-minute time frame. Let's go into the 1-minute time frame. So we are still at a spot where we could rise. I would like to see what the Fed has officially announced. I apologize to everyone. I should have the data ready to go right when it happens, but I'm just not getting that real-time data just yet. The articles haven't came out, but it does look like investors are reacting with right now a bit of a push. Let's take a look at some assets. Let's see how Robinhood is performing. So Robinhood right now is on a nice, decent green uptick. Let's take a look here. Let's take a look here at Big Bear AI. I know this is a favorite on this channel. So BBAI having a push right now as well. So it looks like whatever the Fed has done, the markets haven't reacted too crazy. Again, going back to that meme that we saw earlier, sometimes when you get something from the Federal Reserve, it could be very bloody. And Two Wheels says they are holding rates steady. Yeah, that is exactly what I do believe just happened with the way the markets are reacting right now, because if they weren't holding steady, if they did say that somehow they were doing a hike, I'm sure we would see a massive drawdown. And then if we did see the Fed actually cut, again, like so many, including the president, want to see, I believe we would be jumping a lot higher. So right now, kind of a boring decision, just a push. But hey, I like boring. Finances don't always have to be exciting. I would rather be pushing like we are right now, not having too much movement. And again, this is just with the initial decision. So just 4 minutes ago, the Federal Reserve did announce their decision on what they are doing. And Two Wheels says that they are holding rates steady again as projected. But we're going to get the press conference here with the Federal Reserve in just a little bit here. So in 26 minutes, we are going to see Jerome Powell and the Federal Reserve go live. So Fed issues latest rate decision amid geopolitical turmoil. The Federal Reserve makes its call at the year's second meeting. Faced with new pressure on both sides of its mandate, the Federal Reserve decided today to hold rates steady for a second straight meeting to open 2026. The Central Bank's Federal Open Market Committee, the FOMC, concluded its meeting by announcing it would hold the federal funds rate steady between 3.5 and 3.75, exactly where we have been. And just like this says right here, we are going to see Jerome Powell talk here in about 26 minutes. Let's see what this gentleman has to say. Underlying conditions look little changed since the FOMC last met in January, with inflation still above the Fed's target and the labor market softer but not weak enough to force immediate action. So likely what we're going to see here in 25 minutes when Jerome Powell does come out and talk is that he's just going to say that inflation is a bit higher than they want. The labor market is steady, and right now they are just being data dependent, and the data says that they don't need to do anything with the interest rate decisions. And so, yeah, exactly what we were expecting. Again, there was a 0% odd today that they would actually cut. And so the markets right now just reacting a bit sideways, not the worst. Again, I have been a part of decisions in the past that were a lot more crazy, especially when the Federal Reserve does something to really shock the markets. And so a positive to see here that we are just seeing some sideways movement. Again, we will see what Jerome Powell has to say here in 25 minutes if there is going to be anything to spook the markets. I'm just taking a look here at my phone. I just got another notification from Mumu just talking again about the FOMC keeping at their current rate. When I do look at my portfolio on my phone, oh, wow, we've actually had a decent jump here in the last hour. So there was some anticipation for the meeting. It actually looks like crypto right now is going a bit up. It looks like AMD is actually having a strong reaction. So stocks were very down this morning, but look, we're actually seeing quite the push in advanced micro devices right now, up above 200. Once again, it does look like Robinhood is recovering as well. So, hey, there we go. So the major indexes right now are a bit flat, but actual stocks are moving up. Now, Again, if this is your first time trading one of these, it's kind of a two-part story here. We have the initial decision, and then we have the press conference coming here in 23 minutes. So if you are going to do a trade, just know to trade with some caution because anything is possible. And if Jerome Powell says something to spook the markets, we could see a drawdown. Now, I'm not saying that to spook investors. I'm just telling you all the possible scenarios. There's also the possibility Jerome Powell says something and the markets push higher. But if you've ever been a part of one of these, you know that Jerome Powell could typically be hawkish, or it's just not the most positive. He's pretty boring with his comments. He basically just sticks to saying that he is going to be data dependent, and it's understandable because with the federal chairman, what he says, it really shakes up the markets, and so he is arguably one of the most important people in the world, especially when it comes to the economy and the United States economy, because his word means so much. And so Jerome Powell does have to be very cautious with what he is saying, because if he does say something either too dovish or too hawkish, the markets can have a knee-jerk reaction. And the Fed is trying not to spook the markets. But look at that. We're having a push-up in Robinhood. Oh, and look at this. One of the plays that we have been talking about, a hot in-play stock, Circle Internet Group, also having a push-up up by 1.84%. Having a decent recovery from the bottoms earlier today with Circle Internet Group, a very interesting play. Look at that. Wouldn't you like that? I was drawing that out last night. A God candle. That would be beautiful to see, wouldn't it? But with Circle Internet Group, they had a big gap up, and the momentum has been continuing in Circle. And just talking about, all these important decisions out in Washington right now, the Congress is looking at the Clarity Act. And if that does get passed, that is going to be massive for cryptocurrency. If Home Depot breaks 324, it could drop a lot further, which is a good buying opportunity. Yeah, you were talking about Home Depot, I believe, in the last stream. And yeah, when it does come to technical analysis, right now, I do like where Home Depot is sitting. A true blue chip company. Right now, Home Depot has fallen under the 50-day and the 200-day MA. It has been descending, but now it is low on the relative strength index and on the MACD, getting set up for a potential oversold reversal at some time. Home Depot, a great long-term buy. There will be some recovery at some point. I do believe there will be a lot of recovery in the entire markets once we really do see the Federal Reserve do what investors want, which is more QE. Again, most likely that is going to be happening after we get Jerome Powell out of here. So, let's all take this moment to appreciate what we have in this time frame, because we won't be seeing Jerome Powell for much longer. And so with QBTS, this is a play that I could see having a lot of momentum once we do start to actually get some rate cuts. When it does come to borrowing going down, that is going to be tremendous for all of technology, small caps, and the AI sector of the market. Put this on this tab here. Circle is rocking. I agree to you. When the Clarity Act should get to Congress, well, it's actually being looked at right now. So if you just type in Clarity Act and Congress, a decision is having to be made. But, some are thinking that it won't happen here in the short term. But Congress has only weeks left to convince banks on the Clarity Act or risk losing in the midterms. And you think it's going to go to November? This has been drawn out for a while. This started with the Genius Bill last year. There was the big pop initially in Circle Internet Group. Again, when we just follow the storyline of this big crypto bill, you had the Genius Bill go through, and that was when we saw that momentum surge. But the Clarity Act is the second part that needs to go through to make everything official and to have some real legal clarity to all of it. And so, it is possible that it does happen later in the year. But what I will say here in the short term, Circle Internet Group has been having a lot of momentum. So very interesting to see if we do get that passed, here in the next weeks, we could see a massive surge up in Circle Internet Group. So we have here in 20 minutes, we have Jerome Powell speaking. We are going to be reacting live to the press conference, guys. Just wait 1 second. I will be right back. I just need to grab something. So give me one moment. This is just a quick commercial break. I'll be back in about 15 seconds. But interesting day overall in the markets. Again, when it came to inflation, the numbers a bit higher than expected. And we were just talking about this in yesterday's video. So again, just like I was saying, everybody who is here right now, we have 8 in the live. I appreciate all of you because YouTube is not recommending me the most. I need to put more effort into this channel, do some YouTube shorts. That's why I'm doing these lives. But look at that right there. Absolutely brutal. Just 62 views, but it had great information. You know, I was getting more views in the past when I was doing more clickbait. I maybe need to get back to clickbait, right? You got to play the game of YouTube. But this video right here, the St. Patrick's Day rally luck or smart money setup, we were talking about everything to expect for today. And I am not surprised that we have seen some slaughtering to start the day. But interesting because we are seeing some recovery here in the after hours. Again, just another volatile day when it does come to the Federal Reserve and the FOMC. Let's take a look here at how the major indexes are moving now, because with the initial news of what the Fed was doing, which was just pausing. So if you just got here, the Fed is just pausing when it comes to the interest rates. But we have seen some flat movements in both the S&P and the NASDAQ, a more boring than normal decision, a more boring than normal Federal Reserve decision, because usually with these there's a lot more volatility present. But again, I am not too upset with just some sideways movement. It gives us more time to build our crypto positions. Yeah, are you pretty decently big in crypto? I have a couple friends who are really into cryptocurrency. Let's take a look at how crypto is reacting right now. So Bitcoin at $71,000. Bitcoin recently got very close to a major level of support and right now is acting as resistance right at $75,000. So not officially able to break past that point. But again, let's see. This is a two-part series when it comes to the Federal Reserve. Let's see if Jerome Powell can say anything that can help to boost the markets up. Let's see if it's a good afternoon and disappointing words from Jerome Powell like we have seen so many times, or if he surprises us and says something that the markets do perceive as dovish. It looks like we do have somebody else who is big into cryptocurrency. Stephanie Diaz, welcome back to the live stream. Always great to see you as always. If you just got here, the Federal Reserve has decided to keep the interest rates at exactly where they have been. So another pause with the Federal Reserve. So with this, you can see it all here in this article. The Fed issues latest rate decision amid geopolitical turmoil, and they are keeping it between this 3.5 and 3.75. So the first 15 minutes of the stream, the first 10 minutes were dedicated to just preparing for the decision. The next 5 was the reaction to the decision. And now we are just waiting for Jerome Powell to go live here in 15 minutes. But that is just to catch you up on everything, Stephanie. But great to see you here as always. I got a price target of XRP close to $20. Two wheels. I would be curious to hear why that is your price target. Can't wait. Amelia Nogales. Well, hey, thank you for being here. I believe this might be the first time I've ever seen you in one of our lives or in the comment section. So I appreciate you for joining us. If you're not already a part of this channel, we do videos every single day for the most part. And if we aren't doing our daily talk of stock, we always do some live streams. We do some live streams every single Sunday as well. And we are just always looking at all the macros. We're talking about the Federal Reserve and then many different individual stocks as well. And everything on this channel is just free information. So just looking to increase the viewers that we have here on Green Money Momentum. FFFFF. I agree. You hate to see the Fed do what they have done so many times, which is just disappoint the markets by keeping the rates steady. We know that President Donald Trump definitely wants to see some cuts. He has taken so many opportunities to bash the federal chairman. It looks like he hasn't said anything on Truth Social yet about Jerome Powell, but at some point later today, I do expect to get the opinion of Donald Trump on what he thinks about what the Federal Reserve has done today. I guess bet on the dollar Silver is about to cut and burn. Let's take a look here at silver. Let's go to the silver futures and see how silver is doing at 77. You know, it's interesting that you talk about the hard metals because the hard metals react a lot off of everything that is happening geopolitically, but also with the Federal Reserve. It's funny when it comes to the interest rates with the hard metals because it is kind of bullish either way, whether the Fed cuts or whether they keep things stagnant or whether they even hike. All of that is bullish for hard metals because many look at hard metals as real sound money. I mean, that's what it was initially, gold and silver, real sound money. So a safe haven. And so silver right now at $77. Silver, and these are the futures, by the way. Silver was squeezed all the way up to $120, fell down to the 50-day moving average, now trailing a bit sideways. And then unfortunately, most recently for silver bulls, seeing a bit of a bear death, not a death cross, that would be the 50-day dropping under the 200-day MA, but seeing a bearish cross here on the MACD. But overall, the hard metals are a very safe place to be generally. Again, we did get a bit overextended on silver. We have started to consolidate sideways, but again, silver and the hard metals react a lot to the geopolitical tensions. There's been a lot of the sell America trade most recently, where a lot of other nations are dumping their U.S. treasuries, and many have been going into the hard metals as a safe haven. So we are sideways here. And even though we did see this bearish cross on the MACD, I do believe that silver at worst maybe drops down to the 200-day MA, but overall a pretty safe play generally. When silver retests 54.41, I would buy the metals mining stocks like Hecla Metalling, talking about 54.51. That's funny because that is pretty close to where the 200-day moving average is currently. In 12 minutes, we are going to have Jerome Powell going live. I would be curious to hear all of you in the live chat what you think Jerome Powell is going to say. Do you think he will have some dovish remarks as in positive, positive for the future around quantitative easing, or do you think he is going to be dovish and spook the markets? At the last Fed, gosh, I can't think of what it's called, the last Fed minutes meeting, where it's kind of the internal conversations of the Fed, they were actually talking about some potential rate hikes. If Jerome Powell says anything about that being a possibility, oh man, that would absolutely spook the markets. But I'm not expecting that from the Fed. I believe that they were just playing some hardball by saying that. Again, the Fed could really spook out the markets with what they say. Got to watch his body language. Yeah, we're going to see, again, the classic meme is as soon as he comes out onto the podium, he says, "Good afternoon," and then boom, you see a massive drop. So many eyes are on Jerome Powell here in the next 10 minutes. We are going to be live streaming that. That's going to be here at 2:30 p.m. Eastern Time, 11:30 a.m. my time. I would be curious to hear where everyone is out today. So let me know what area you were in. I know we had a viewer from the United Kingdom earlier, and it was 6 p.m. for him. Let me know, all of you, where you are coming at. Are you out of the United States? Are you in a foreign land? Are you in Eastern Standard Time, Mountain Standard Time like me? What time is it for you in the markets right now? I would be curious to hear what everyone has to say. Let's take a look here at some individual stocks. Again, let's take a look at one of the favorites here, Robinhood, see how Robinhood is reacting. An initial push we had, looks like we got a red candlestick here. Again, no surprise when it does come to trading for these big decisions. Again, a two-part event. We have the initial news, which again, the Fed not doing anything surprising here, just staying stagnant with the rates. And then we are going to get Jerome Powell here in a little bit. Oh, the Bay Area. I love San Francisco. Such a beautiful place. One of my favorite places in the world. I love all of California. I always try to make it out to California at some point in the summer because out here in Arizona, it gets crazy hot. I mean, we are still in March, and let me pull up the weather app. Let's see what the weather is currently. So the weather right now is 92 degrees. Oh, it looks like I'm getting a call, guys. We are going to be going live on the meeting here in about 10 minutes, but this is going to be the second commercial break. So just give me a quick second, everybody, as I got to take this phone call. Oh, never mind. It looks like it is just spam. So I am going to let that go. That is good. I don't want to have to take a call here on stream. Deer in the headlights. Yeah, you think that's how Jerome Powell is going to come out? He's going to come out like a deer in the headlines. I always learn from the discussions between Trevor and Two Wheels. Well, hey, Chris on the mom, I appreciate you saying that. That is all what this channel is about. Just education, my trading journal, and the community we have here on Green Money Momentum. And everybody who is here, you are an OG on the channel. There is going to be so much more with this channel, so many more YouTube shorts, so many more vlogs, so many more videos, and continued education. And all this education is absolutely free. I, again, just want to connect with other investors and really grow this YouTube channel. Currently, the movements have been a bit slow, so I really haven't been being recommended by YouTube too much for many months now, but a very loyal audience that I do have. And for every one of you that continue to comment, hit the like button, and who continue to show support, you guys are very appreciated, because that does show YouTube that there are still people who want to listen to me. And yeah, that is what this channel is all about, just education, all of us becoming more wise, becoming better stock market investors, because as humans, that is all we can do. And I feel like myself and this community, we are all always just trying to improve, right? My whole life is about trying to improve and make stair steps up every single day. Improve in the gym, improve when it comes to health and eating, improve when it comes to the stock market, improve when it comes to education, just have constant improvement. And that is why I love this channel, and for everyone who comes to this channel, because synergy, we have synergy. We are all improving together. Great minds think alike. And I agree with you, Chris Son, the mama, that I enjoy the conversations that we have here. And many of you have pointed out tickers that I have now started to look at that otherwise I wouldn't be looking at, one such as Ondas having a flat day. But talking about the drone technology companies, oh my God, there was one, Swarm, I believe it is. Swarmer, look at this, talking about big momentum, 85% today, up by $26. So a massive jump in this ticker right here. This is why in the short term, we've had some hard retractions in the market, but this is why we stay faithful, why we continue to invest, why we all continue to learn, because I am not in Swarmer right now, but it is always beautiful to see a ticker have a big jump, because it just shows what is possible in the markets. And I've been saying this a lot recently to everybody who is watching the videos and the live streams. Congratulate yourselves on still being here, because with the markets being so flat and to the downside for many different stocks since October, many have actually been tapped out of the markets. And so for everyone who is here, it's great that we are still learning and improving together. It looks like with the initial reaction of the Fed decision, we were looking at the major indexes earlier, and they didn't really have too much movement towards the upside with the initial decision that the Fed was just going to keep the rates still. There was a little bit of a push up, but really just such flat movements. And that movement of it being towards the upside, the small movement, the 10 minutes that we saw of green has already been eaten up. So the market's really lingering on this decision, which is going to be in 5 minutes when we see the Fed here. So we'll put that here on the stream. Let's see if we could go to the Fed's YouTube channel. That might be the best place just to get it live, to make sure we catch it, make sure there's no delayed reaction with their website. Hey, Hims and Hers Health. Yeah, talking about, bullish momentum in the markets. If somehow the Fed does say something, if Jerome Powell isn't a lame duck, if he says something that the markets like, I do believe that Hims and Hers Health is a great opportunity. When it comes to hot in-place stocks that I am currently looking at, Circle Internet Group, which we talked about earlier, then also Hims and Hers Health. What's very interesting with Hims and Hers Health is this stock was a very high-flying, volatile stock. It was well above the 200-day moving average for a long time, but then there was a lot of fear, uncertainty, and doubt around Novo Nordisk. They were suing Hims because of the GLP drug situation, and now all of a sudden they have partnered up, and there was a big 50% jump in hims and hers health. But so there could be a big jump, but also the same to be said if we do see a harsh reaction from what Jerome Powell has to say, we could start to descend on hims and hers health, as we are a little overextended on the relative strength index and a bit high on the MACD. But I do believe that we could push higher, and just because we are overextended doesn't mean that we have to fall down, but many times gaps are meant to be filled. I think he is going to take a swing at Trump. That is funny. I don't expect that. Most likely the federal chairman is just going to say, good afternoon. We are remaining data dependent. We want to see inflation come down. We want to see the labor market get a bit better, but right now it is stable. It's not too bad to where we have to cut. We are going to just remain on this stance. It's actually, it's not the most exciting, but it is important to be a part of these because it just is another factor of the market, such a big factor. The Federal Reserve really does move the markets. Is Powell live? He is going to be live here in 3 minutes. And so we are going to be reacting live. As soon as he goes live, I will let Jerome Powell speak. So in just 3 minutes, San Fernando Valley, California. Oh, also out in California. Well, that is awesome. Great to hear that you are close. Yeah, I am in Arizona, so exact same time out here. Maybe Trump got to Powell over the weekend. Maybe they played some tennis or took a ride in Trump's gold-plated golf cart. That is funny. Yeah, I don't think these two guys were probably playing tennis. You know, Jerome Powell and Donald Trump, not too big of fans of each other, at least what they show on camera. Maybe it's a play, you know, when it comes to politics and the big wigs. You know, again, we are like fish on the outside of the bowl. We are just collecting as much data as we can and trying to make as educated of decisions as possible, but it could always be fugazi. Just because they show that they hate each other out in the public, there is always the possibility that they are actually friends behind the scene. It kind of reminds me of like back in the day when we had the Conor McGregor and Floyd Mayweather fight. Apparently, they were going to those events in a private jet together. So it's funny because they would be all face to face, all angry at each other, spewing hate. But then it's like those guys are eating food together on a plane. And then you are out in Dallas, and it is 1:25 p.m. Nice. That is cool. Dallas is cool. Texas is cool. Bitcoin bearish. You know, Bitcoin is sitting at a very interesting spot because Bitcoin hasn't quite broken the neckline right at 75,000. So Bitcoin, you know, we'll see how Bitcoin does react to what the federal chairman is going to have to say here in just a minute. We are going to be live with this. He is expected to come out and walk out onto the podium any second. So woof, get excited, everyone. This is when your blood needs to start flowing. This is when you may actually really start to see the big movements within the markets. So let's see how the markets react. Right now, we had a little bit of a push in some individual stocks with the initial decision of it just being a pause, but really just flat, overall flat in the major indexes. And again, this is a big two-part event, and this is, you know, even more important than the initial decision because Jerome Powell is going to come out either dovish or hawkish. At least the markets will try to figure out what his sentiment is while he is going to try to keep as flat of a face as possible. So there's going to be some volatility present here in just a little bit. Also, if you just joined us, we talked all about the economic news and data that happened earlier today. We got the PPI reports, so the reports for inflation for the producers, and they did come in a bit higher than expected. The Fed did decide to just keep rates where they are at right now, which is no surprise. And now we are going to see Jerome Powell here in just a minute. Looks like he might be a minute late. He's going to make us wait. Let me make sure this is at least running. So, okay, looks like we're going to get it.
Risks to both sides of me are the implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. From last September through December, we lowered our policy rate 0.75 percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net, we didn't make progress. And if you look at total core inflation, it's about 3%. And some big chunk of that, between 1/2 and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations remaining well anchored. And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind. And the question of looking through when it does arise will be one to approach not lightly, but in the context that you mentioned.
And just on the S&P, can you help us make sense of why there is still a bias to cut for most officials this year, despite the upward revision to headline and core inflation and the essentially unchanged forecast for growth and unemployment? Just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so there are 19 people, and so 19 reasons, 19 individual submissions. And if you notice, the median didn't change, but there was actually some movement toward a meaningful amount of movement toward fewer cuts by people. So 4 or 5 people went from 2 to 1, let's say, 2 cuts to 1 cut. And each person has individual, stories behind what they want to do. But essentially, it is that the forecast is that we will be making progress on inflation. Not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year progress on tariffs, going through once and then tariff inflation coming down. We should be seeing that. And the rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
Howard.
Thank you. Howard Schneider with Reuters. Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also just the feeling that we haven't seen, the progress that we had hoped for on core goods and on tariffs and on the rest of it. So for whatever reason, people did write up their inflation forecast. That will certainly be tied to events in the Middle East and the price of oil. But it's also, I think, a reflection of the slow progress we've seen on tariffs, which we believe we will see. It's just a question of how long it takes for them to get all the way through the economy, and it just takes some time.
Right. And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas prices, diverting spending from other parts of the economy?
So I didn't get the second part of your question.
The consumers are going to be potentially diverting money to gasoline from other parts of the economy. There could be a growth shock or a redistribution of spending there. They can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction that to your point, if we have high if we have a long period of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected pass through. So people write down, this is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one because we just don't know. So I wouldn't say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write something down, and this is something that is that people wrote down. We don't debate how long. How do you do that? We wouldn't be able to debate what the length of or size of these effects would be. We just have to kind of make an individual statement. And also, what you've written down before you'll be reluctant to move too far away from that just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile, the growth has been solid, and inflation, the overshoot is mainly from the goods and tariffs. And, the labor market is, the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs with little growth in either demand or supply. But the U.S. economy is doing pretty well. It's just we don't know what the effects of this will be, and really no one does.
Steve.
Mr. Chair, in the past, the staff has suggested that higher oil prices, they have a hit to consumption, which Howard was talking about, but that's somewhat offset by increases to domestic production. I wonder if you could talk about that dynamic, especially to the extent that how much U.S. production is happening right now.
So the first thing is there is, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, sorry, your question was?
What the staff is saying about, and has said in the past.
Yeah.
About
so there'll be an offset.
Offsets, yeah.
So that's true. We have, we're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment that we're going to have higher oil prices for an extended period, but meaningfully higher. So I wouldn't say there's much of that happening. Not much will be happening now, but some of that could happen over time if you see that. But so the net of the oil shock will still be some downward pressure on spending and employment and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that having looked through tariff inflation and inflation running above target and looking through the oil price shock would undermine the credibility of your commitment to the 2% target?
We have to do our analysis and think these things through carefully. But of course, that's on everyone's mind. We're well aware of the history, but you don't want to overreact to that. You want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be, actually. And, it's one of those things where it's a repeated set of things. And you worry that that's the kind of thing that can cause trouble for inflation expectations. And so we worry a lot about that. And we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%. And, I think it's important that we do that. Very important.
Nick.
Nick Timmeros, The Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is roughly stable, inflation moving sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well, as you just outlined. What gives you confidence that inflation returns to target over the next couple of years?
Okay. So I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not. Remember that a big part of the disinflation we're looking for is just the runoff of when tariffs are put into place. Of course, what they do is they raise prices to some extent, to the extent those prices are the tariffs are paid by consumers on a one-time basis. And we're waiting for that process. It takes 8, 9, 10, 11 months, a year to go through the system. And we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system so that goods inflation will return closer to what it's always been. I mean, it used to be, for many, many years, it was negative. And then, the year before tariffs came in, it was 0. And it's running at like 2% now. So, and so that's kind of, goods inflation is running at 2%. So that's not coming from standard Phillips curve restrictive, restrictive policy. It's coming from the runoff of a one-time thing. We also think it's important, though, to keep policy either mildly restrictive or close to that, but not too restrictive because of the weakness in the downside risk in the labor market. We are balancing these two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are to the upside, which would call for higher rates or not cutting anyway. So we're in a difficult situation, and we feel like our framework calls on us to balance the risks, and we feel like where we are now, which is kind of on that borderline, the higher borderline of restrictive versus not restrictive, we feel like that's the right place to be.
Can I ask about core non-housing services, though? Because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation maybe been slower to follow?
That's a good question. It's frustrating. Labor non-housing services they basically moved sideways for a year. They're at the same level, and we do expect that they will come down. But it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing services, but we're not seeing progress there. So we do, what we expect for next year is continued, what we want to see for this year rather, is continued progress on housing services, finally seeing that, the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see. But it's a good question why we didn't see much of that last year.
Edward.
Thanks, Chair Powell. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January revised down. February posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation, CPI is close to 2%. PCE has ticked down overall.
It's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to the unemployment rate being stable, and in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely, a ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation, you can, we're at 3.0% core. Inflation 2.8% headline. So we've been well above the 2%, that amount, whatever it is, 0.7, 0.8, we're a full percentage point above 2% for some time. And that's a concern. We need to get back down to 2%. And we need to keep focused on that, even though we do now face some new inflation from energy. So I'd be hard pressed to say that one of them is obviously more at risk than the other.
And if I may, what happens if there's no Federal Reserve chairman confirmed on May 15th? Would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality. And I would refer you to the statement that was in the Fed's brief that you all have seen, and I won't have anything more for you on that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet. And I will make that decision based on what I think is best for the institution and for the people we serve.
Wow, I just got to cut it off real quick because these can be very long meetings with Jerome Powell. You do have a lot of interviewers asking questions, but right there, that may have been the bomb that we were expecting with this meeting. Each time you have one of these meetings, investors are always looking for something with Jerome Powell's body language, with what he says. And this guy just hit with a very hard question asking if Jerome Powell will leave. And he is saying that he may even still stay on the board once the new federal chairman comes in. So very interesting with that being said. And right before that, he was even saying that the labor market a bit weak because of immigration policy. So interesting that he said that right there. But that was pretty big to hear that from Jerome Powell. We're going to let this continue to run. But as I look at the markets right now, it does look like that was kind of the shock wave to send the markets down. I am now looking at many different plays having some down draws. So Jerome Powell may not be leaving the Federal Reserve. I know many investors don't want to hear that. We'll let him continue and then we'll get back to this. But wow, that was huge. That was a huge question. The markets right now, again, drawing down a little bit. Oof, let's see what the rest of the meeting looks like here.
Figuring you probably were going to set the dominoes off there, Edward.
See, even Jerome Powell said he set off the dominoes there.
And I'm not going to have any more to say on those issues, by the way.
Thank you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent do you think we're in a different place today? Thank you.
It's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to the tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up, if I may, just on the BLS report, that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate and focusing on that your view on the labour market story, to a large part being a supply side story, has changed, despite the quite negative number in February. Would that be the right take, and was there anyone else in the room who thought differently, and that the February jobs report was cause for concern?
So I think you have to take the two together. In a way, the January report was a positive surprise, and the February report was a negative surprise. If you put them together, you get something in the middle, and I think you have to, as you do, I'm sure, realize there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see? You take a step back overall. There are a number of indicators that suggest a degree of stability, but the thing that I think a good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually, that looks like that's about what the economy needs in terms of dealing with very, very low, non-existent really growth in the labor force, which of course we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now that's balance, okay? But I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance. So we look at that, we see it, we get it, and everybody understands the arithmetic, and that's you can say the break even is zero, but nonetheless it's something we're watching carefully, and are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration, because that's the biggest factor there. And but nonetheless, something we watch carefully.
Andrew.
Thanks, Chair Powell. The economy's experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common, and does the central bank need to start taking account of the risk of supply shocks as a more common problem?
we did go through a long period where the shocks were all demand shocks. And, so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years for sure. It's just a very different thing and a very much more difficult thing because it does immediately raise the question of tension between the two parts of our mandate. So, but, has the world changed? I mean, COVID is a one-time thing, right? This energy supply shock is a one-time thing. It's not because of some broad tendency or anything, I don't think. And the oil shock with Ukraine was also a consequence of military action. So I don't know that the world has changed in a way that there'll be more supply shocks. But there's people have written that paper and that speech a number of times. A number of people have tried to make the case that is the case. And in fact, we have seen more supply shocks in the last 5 years than we've seen in many years before that. It's a fact.
Just want to say, I'll let this continue to run through. This is live currently, but there has been a lot of talk about oil with this meeting today. There's been a lot of talk about oil, about supply shocks, and just a lot about that. I've wrote down a lot of notes that we'll get here in the end. Again, I appreciate everyone for being here, but we did see the market start to drop off moments ago when we did hear that Jerome Powell may be staying on the board, even if Kevin Warsh does become the new federal chairman.
Okay. You said last year that the Fed was reviewing its communication strategies, including the SEP, as part of its framework review. Whatever happened to that? And I have like 5 follow-ups to that, but I guess, what would you change about Fed communications if you had the time? Thanks.
What happened about that was not much. And I'll tell you why. So, we looked carefully at many aspects of the SEP and of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So we didn't really make any changes on that. I had hoped that they had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we didn't. And I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Michael McKee from Bloomberg Television and Radio. The minutes show in January, some members of the committee wanted to include a two-sided guidance on policy. Was that discussed today? And given the rise in the inflation expectations, how much support for a two-sided policy warning would there be?
So it did come up today. The policy the possibility rather that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case. And of course, we don't take things off the table. But you correctly characterized, what was in the minutes that several participants indicated, and something very much like that conversation did happen. What was your second question now?
I was just one question there, but follow-up would be, there are a lot of goods besides oil that are trapped in the strait right now, and a lot of supply chains getting snarled. How much concern do you have about whether, if this becomes an inflation problem beyond just oil, whether there's anything you can do about it or would do about it, given the efficacies of monetary policy?
You can worry about other commodities. You can worry about all of the ways that oil-related commodities go into manufacturing and that kind of thing. The truth is, it's completely out of our hands, and we just, like everybody else, we have to just wait and see what happens. And it'll come down to how long, the current situation lasts, and then what are the effects on prices, and then how do consumers react and that kind of thing. Really, I wouldn't speculate in any way, and there's really not a lot we can do other than kind of watch and see.
Maria Luisa.
Afternoon, Chair Powell. Maria Luisa Capurro with Bloomberg News. I wanted to ask you, you've said longer-term measures of inflation expectations reflect confidence that the Fed will get back to its 2% goal, but there are some colleagues of yours who have pointed to higher dispersion in household service and business services as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering if there was a discussion around that at this meeting across the committee, and what were the views of what is the state of inflation expectations and the risks from higher oil and gas prices.
So at this meeting, I mean, a number of people mentioned and staff briefed on short-term expectations having moved up quite a lot for reasons we understand well. But long-term expectations, you can always find one that's troubling or some aspect of one that's troubling, but ultimately, right through this whole period, the overwhelming majority of the things we look to, including markets, including surveys of the public and also of forecasters, they've all been pretty solid on longer term inflation expectations being right where they need to be, consistent with 2%. So that continues to be the case. We didn't have a lot of conversation about that. I think everyone does agree that we'll be watching those extremely carefully as we see the effects of the price increases come through from the conflict.
And still on how the discussion went across the committee, before coming to this meeting, there were some members who were discussing the risks of a slowdown in growth and at a time of where inflation remains high. It really doesn't seem that most members are penciling in a slowdown in growth.
No.
But has there been any discussion of the risks of stagflation at this point?
So people actually wrote up their growth forecast by a tenth, and I think that's probably to do with just growing confidence in productivity. But sorry, and your second question was just.
If there have been any discussions about the risk of stagflation scenario.
Yeah, so as I mentioned, there's tension between the two goals, right? The upward risk for inflation and downward risk for employment. So, and that puts us in a different situation. When we use the term stagflation, I always have to point out that was a 1970s term at a time when unemployment was in double figures and inflation was really high and the misery index was super high. Add them together, you get the misery index. And that's not the case right now. We actually have unemployment really close to longer run normal. And we have inflation that's, 1 percentage point above that. So calling that stagflation, it's not, I would reserve the term stagflation for, a much more serious set of circumstances. That is not the situation we're in. What we have is some tension between the goals, and we're trying to manage our way through it. It's a very difficult situation, but it's nothing like what they faced in the 1970s. And I reserve stagflation for that, the word for that period. Maybe that's just me.
Elizabeth. Thanks so much. Elizabeth Schulze with ABC News. President Trump says that oil prices and overall inflation will go down very rapidly as soon as the war ends. Do you agree with that?
I don't have a forecast on that.
When we're thinking about the impact on American households, as you know, they've been facing these higher prices for years. They've seen an almost $1 increase in gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
We don't know how big these effects are going to be, and I don't want to characterize them in any way. Of course, people are already seeing gas prices. Gas prices are up almost $1 a gallon. We hope that isn't for a long period of time, and of course, people will feel that. But I don't want to speculate about what that might mean, because honestly, that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at that.
Victoria.
Hi, Victoria Guido with Politico. I just wanted to ask, for purposes of the next meeting, how the Middle East war develops between now and then, how are you thinking about what might guide action at your next meeting? I mean, if we have oil prices, above $100 a barrel the entire time until the next meeting, is that going to change your wait and see stance? Like, what would lead you all to move, or are you on hold pretty indefinitely?
keep muting myself. I just want to say that is a great question. I look forward to seeing what Jerome Powell is about to say, because there is the theory of a Fed put. That is where the Fed basically has to start cutting rates because the economy forces their hands, and oil rising so significantly most recently. If that does continue, this could cause a lot of pressure. And her question right here is very valid. So let's see what Jerome Powell has to say to this. But yeah, the Fed put is a very realistic scenario, and oil is adding a lot of pressure to inflation. In the short term, it could cause a lot of pressure if it stays elevated, because it's not just about the gas in your cars, but it goes everywhere in the economy. So much is affected by oil. So let's see what Jerome has to say.
We'll have to wait and see. I mean, we always say we're going to learn more.
I just gotta say, that was a funny moment. We all laughed right there. That girl laughed right there. I had a real laugh right there, because that is Jerome Powell to a T. We'll just have to wait and see. That is what this whole meeting has been about, with everything Jerome Powell has said. Again, I've taken a ton of notes, so stay here for the time this meeting ends. I love this type of economic discussion. So much has been thrown in this, and we'll get all into it, but a lot has just been Jerome Powell saying he will wait and see, continue to stay data dependent, as he always says.
Or by the next meeting. And usually we do, but in this case, we're going to learn a lot, because we're going to learn 6 weeks to the day till the next meeting. And, we're going to see whether what happens is it's going to be very important for the way the economy looks and the way the outlook evolves. But what happens in the Middle East, that's going to be a big factor. And we'll know that then. I don't know how it's going to affect our thinking. I really don't. And we did talk about alternative scenarios a little bit, but it's just, I wouldn't bring that in here. It's very uncertain. And I just want to remember that we don't know, and we shouldn't assume it's going to be one thing or another. We're going to see.
So is it a matter of you don't know how the situation itself is going to evolve, or even if things remain as they are, the economy can still remain relatively durable in the face of them?
Yeah, that's true too. No, I mean, the U.S. economy has just, it's been strong through a whole bunch of challenges. I mean, if you go back to 2023, when we raised rates a lot in 22 and 23, and close to 100% of economists called for a recession, which didn't happen. In fact, 2023 was a really strong year. So the U.S. economy has really been just doing pretty well through a lot of significant challenges over the past few years. It's been amazing to see. And again, I don't know what's going to happen in the next intermeeting cycle. I don't know what's going to happen in the Middle East. I wouldn't want to speculate.
Hi, Chair Powell. Thanks for taking our questions. What makes you so certain that tariff-related price increases will be a one-time effect? I don't think we've seen you since the Supreme Court tariff decision, and it's pretty clear that none of us know what the extent of the tariff shock will be as the administration moves to replace some of the tariffs that were overturned. So I suppose I'm curious, what would make you question this certainty that tariffs are going to be a one-time price effect?
Well, I would not at all use the word certain about my views on that. I'm not certain. I'm uncertain. But just if you think about what it is, it's a one-time increase in the price of a good, right? And what inflation is ongoing increases in prices this year, next year, the year after. That's what inflation is. It's not a one-time price increase. There's a very, very big difference. The public doesn't really focus on that, but that's the difference. And tariffs should be, in theory, unless they cause people to start expecting still more tariffs the next year and still more tariffs the next year, they should be a classic one-time thing. People say the same thing traditionally about an energy price spike, because traditionally prices go up and they come back down. And by the time monetary policy would react, it would be over. So I don't have tons of confidence on that. I mean, I think that the theory is probably right, but as usual, the time it takes to get all the way through the economy is just very uncertain. And we found that coming out of COVID, that the inflation did go away, and largely for the reasons we thought it would, but it took 2 years longer than we thought. So I think we have to be humble about knowing how long it will take for tariffs to go all the way through the economy. And so what we've been doing is what our staff's been doing. It's very interesting. They started off with just an estimate because there wasn't a real history, and then they built based on the history that they're seeing of tariffs coming through in prices. They can now have an arc, and for all the tariffs, they can say, well, so we have, I think, slightly more confidence that we will see tariff inflation coming down, not prices, but you won't see further increases, and we should start seeing that more and more in the middle parts of the year. We do expect that. And you're also right, though, that the level of tariffs came down fairly meaningfully in the wake of the court decision. But the administration said they're going to get that rate right back up to where it was. So, and we assume that they'll do that over time. So that's how we think about it.
Hi, thank you, Chris Regan, Associated Press. You talked about the shortcomings of the SCP in this environment. I wanted to ask about, or throw in an additional thing, which is the fact that it's happening before transition. Is there still some value, perhaps, in the public knowing what other Fed officials are thinking, the ones who will stay on for the rest of the year and beyond? And does that even handicap your successor in any way? Well, just in terms of having a whole committee expressing its views, is that something that locks them in for the rest of the year?
No. We never. The SCP is never. People are more than happy to change their SCP dots. They're no way bound by them. It's your opinion at a moment in time, which can change based on events. Sometimes very quickly. So it never locks people in. People are more than happy to be proven wrong. in either direction. And so I just think we do it. And, I mentioned this was a time when it's very hard to do it. During the pandemic, we actually took one meeting off, I think. But we don't like to do that just because it's hard to do. We should just keep doing it. But I just would say for this one, though, I think it's even more than usual good to take the forecast with a grain of salt, because subject to just very high levels of uncertainty.
Brian. Hi, Chair Powell. Brian Chung with NBC News. So you mentioned at the beginning of this conversation that you're well aware of the history of inflation running above target. It seems like that might be what's underpinning the affordability problem that we're hearing a lot about on Main Street. Are there any signs to you that that's impacting the psychology of the consumer, especially given that they're a big driver of overall economic activity?
I'm not sure what that's all about, but I'll tell you what I think and what we see in surveys, and that is, there were big price increases all around the world, by the way. Everywhere in countries like the United States had basically the same kind of thing. It was a global inflation coming out of the pandemic, and everywhere people are feeling like real wages have been going up in the United States now for 3 years, roughly. But people are not feeling good about it yet. And it will take some years of positive, real earning gains for people to feel good again, we think. But you're right. But when you talk to people, they do feel squeezed. And, there are areas where prices are still going up, like insurance. Various different kinds of insurance are getting more and more expensive. And that's just catching up really from inflationary pressures that take a while to get to into the price. So we take it very seriously. We don't dismiss it at all. It's a very real thing from the standpoint of what people are experiencing. And what it does for us is, makes us even more committed, if that's possible.
He is not wrong there about the increase in prices still happening, especially around insurance. Insurance has been rising like crazy through the years. And Jerome Powell also not totally wrong about the inflation that does come with more stimulative monetary policy. But what's really screwed up now is the Fed has already done all of this quantitative easing. They have done quantitative infinity. And now with elevated prices, they are keeping the borrowing costs down, or keeping the borrowing costs a bit more elevated. I know it's crazy to say 3.5 is elevated when in the past, we go back to Paul Volcker, at times they had double digits, but the Fed has already messed up the money supply so much that I do believe that they should start cutting. There is a lot of pressure. This guy's question about the effects on the consumer are very valid, and Jerome Powell's response about the inflation with insurance, also a valid thought. So, I do understand the federal chairman where he comes from with his thoughts. Again, they don't really want to spook the markets, but what I will say is in a way he is spooking the markets with a lot of the remarks that he has said. Jerome has said that he is not leaving. Potentially, once we get that new federal chairman, he will just stay on the board. That's when we started to see a knee-jerk reaction towards the downside. And also a lot of what Jerome Powell has said here is about uncertainty. He did blame the immigration policies for the weaker labor market. And there has been a lot of talks about tariffs, even a question that, why should tariffs be considered a one-time fee? And Jerome Powell was saying, well, maybe we will get some more tariffs in the future. We don't really know. And a lot of talk on this has also been about the SEP, the Summary of Economic Projections, which right now they just look like they're going to do nothing forever. I saw some people here talking about stagflation, and it's funny also talking about stagflation because Jerome Powell was saying you can't really compare this time to the 1970s. It was so different around then. But yeah, it was different for a reason, and that is because the way they measure inflation now is so different. So there's a lot of fugazi going on when it does does come to the inflation reports. And if we did report like we did in the 1970s with more accurate data, I'm sure inflation would show a lot higher than what it really is being told to us. I don't believe that it is just 3%. We got a little bit more of this meeting here. Let's just run it through. Let's see if anything more important is to be said here. I do believe a lot of the truth bombs have already been dropped. I know this is quite long, so for anybody who has joined me for this entire meeting, again, I appreciate you being here. And it's funny because with these meetings, if this is like your first time being here or if you're not familiar with them, you know, initially it could seem kind of boring. As somebody said in the live chat, it's kind of like lawyer talk. But if you really read between the lines, you know, things could be very interesting, especially with a lot of these questions that reporters ask. And again, today has been very heavy around the war and oil and concerns with energy, some very valid concerns. Somebody who was asking questions asked about, you know, what if oil does stay elevated above the 100 mark going into the next meeting? Jerome Powell basically saying, as always, they will wait and see. So it's very frustrating for investors who do want lower rates because Jerome Powell is just saying, we'll wait and see, we'll wait and see, we'll wait and see. And like somebody said, wait till what? Death? It feels like the Federal Reserve will just not move the rate at all. And it's just like the projections, the SEP that they showed earlier, we'll go back to that, but it's like they just want to remain flat forever. No change in anything.
To getting inflation back to 2% on a sustained basis.
How does the Fed's independence play into the ability to address affordability?
Well, independence is what allows us to do our jobs. And, you know, stable prices is half of our mandate. It's one of our two mandates, the maximum employment being the other. I mean, look at every advanced economy that looks anything like the United States, anywhere in the world, in a market economy, in a democracy, and you'll see, you know, pretty much central bank independence that looks a lot like, in some cases, stronger than what we have. But it's critical that we have that so that we can do the things when we need to do them to preserve price stability. And it's an accepted standard practice, and I think has a lot of support, certainly in Congress, which is where our oversight is in Congress. And you see that among Democrats and Republicans in the House and the Senate.
Hi, Chair Powell. Richard Escobedo at CBS News. Thanks for doing this. Two questions. One, how high would oil prices and broader inflation have to go, and for how long for the committee to consider hiking rates? And then secondly, diesel prices are rising faster than gas prices. How concerned are you that the increase in diesel might drive up food and goods prices and lead to broader inflation?
Yeah, I'm not going to give you an example or a specific answer on the first question. You know, we're prepared to do what needs to be done, but I wouldn't want to hypothesize about what that might be. You know, in terms of diesel prices, so your question there is, are we concerned about it? I mean,
how concerned, and whether or not it will drive up, you know, the cost of food and other goods that really rely on it to.
So I think it's a more general concern than that. It's diesel prices because that's transportation of food and things like that. There's just lots of ways that oil and derivatives of oil get into the production and transportation of many things. So, and those the big effects on headline inflation, but things like that leak into core as well. And the effects may not be as big, but they're quite real and they're material. So we are aware of that. We're watching it, but you know, we're right at the beginning of this, and we don't know how big. We just don't know how big this will be and how long it lasts. You know, it may or may not be something that really makes a big imprint on the U.S. economy. We're just gonna have to wait and see. Thank you.
Thanks very much. Just to sort of stare into the future for a little bit, I was looking at the longer run bits of the SEP and noticed that the growth estimate had been revised up a chunk from 1.8 to 2, and the kind of long-term Fed funds as well. It'd be great to hear that. Is that AI productivity or what's going on there exactly?
Yeah, I think it's just productivity. You know, we actually started seeing meaningfully higher productivity some years ago, 4 years ago, 5 years ago, and that's not because of generative AI. We won't know for years what it's really due to, but it could be due to the kind of things that people did during the pandemic to economize and somehow become more productive because there was an incredible labor shortage. But I think economic forecasters are very skeptical of periods of high productivity because they're so rare and they're often revised away. And for many, I never thought I'd see this many years of really high productivity. And by the way, I expect it to continue. And we haven't really started to see the effects of generative AI, and that should certainly contribute to that. So it's quite unusual. And it's this is the higher productivity is the thing that allows incomes to rise over time. And so it's a great thing. Was that your question?
Yeah, no, I was curious what lay behind that. And just briefly on that as well to finish up, you hear the argument a lot. This is all this inflationary story. If you believe that productivity thing, that should also weigh down inflation over time, maybe then kind of pull down where rates end up. Do you kind of agree with that line of thinking, or do you think that's not how you think about whether rates?
I think you have to be cautious about that, in particular if you're talking about AI, about generative AI. So remember, in the short term, what's happening is we're building data centers everywhere, and that's actually putting pressure on all kinds of goods and services that go into building these things. So that's actually probably pushing inflation up at the margin. In addition, it probably raises the neutral rate. So in the near term, you're not looking at something that would immediately call for lower rates or that would be lowering inflation. Over time, though, sure, if it's expanding potential output, which is what high productivity does, then it actually can be. But I think it's an empirical question because it's really what is the demand growing faster or slower than the supply side? And I think we just don't know that answer ex ante going in. We'll just have to wait and see. Thank you very much.
Okay, everybody, the event for the Federal Reserve has now officially ended. For everybody who is still here, thank you for still being in the live stream. I know some of that could have been like watching paint dry. The Federal Reserve meetings, I find them to be very entertaining. I love that type of talk. And for everybody who is in that room, I mean, man, that is amazing for all of them. Can you imagine being able to ask Jerome Powell questions, being in this room? A very powerful individual, the federal chairman, and they were hitting some they were with some very hard-hitting questions. So first, I just want to show here just some of the charts that we got from the Federal Reserve. Overall, I would say the meeting was a bit more hawkish than dovish, meaning negative when it comes to the expectations for the Fed to be more stimulative and cut more rates. You know, as always with Jerome Powell, basically different day, same story. We're just gonna wait and see. When it comes to all their projections, everything expected to just be flat. Like someone was saying in the chat, basically, what is this stagflation? You know, the GDP and projections are about to be flat. The unemployment, they are expecting flat, which I think could get a lot worse. Jerome Powell was saying the unemployment is a lot because of the immigration policies, but really it's like a lot of it has to do with a lot of different companies, you know, cutting their employees with the rise in AI. I mean, simply, you just have to go to what you could, you know, basic places in society. You really don't even have to look that deep to see how AI and technology has taken some jobs. You could go to the grocery store and see all the self-checkouts, and now even fast food restaurants. So that is just an example. We have a lot of robotics out in Nevada, and there is just a lot of pressure when it does come to inflation, and also what the Federal Reserve is doing with trying to keep their mandate at 2% inflation. They are not trying to get runaway inflation, but with that, we could be seeing some be seeing some stagflation because everything is expected to just remain about the same. This is the assessments of appropriate monetary policy, the projections for the federal funds rate, and really it is not expected to change too much. So really in the long run, they are just looking to keep everything as it is now. With this meeting also, I thought this was a great question because someone was talking about stagflation. One of the reporters, and they were saying, is, you know, today's time kind of like stagflation in the 1970s. But again, this is where so much of this is fugazi, because simply if you just type in, is inflation measured different now from 1970? Yes, inflation is measured differently today than in the 1970s. Key changes include removing volatile mortgage interest costs in 1983, adopting changed CPI to account for consumer substitution to cheaper goods. So a lot of these statistics aren't even reported the same as they were in the 70s. And this is just so the Fed can continue, and the Fed and the government could continue to really keep the bigger problem under the rug. As I've said so many times with the Federal Reserve, not really talking about this meeting, but just in general, you know, the Fed and the government want to continue to kick the can down the road. So with the SEP, the summary of economic projections, with them saying that basically nothing will change, I don't expect for this to be the case. I do expect for at some point the Federal Reserve to step in and get more stimulative. And even Jerome Powell said it himself, when it does come to the SEP, it is subject to change at any time. So just because they are saying that at this meeting doesn't mean that it will stay this way. But at this meeting, there was just a lot of talk about oil, the price rises that we have seen most recently, whether or not the Federal Reserve will change on their SEP because of oil. Jerome Powell, of course, being a great lawyer or just being a great talker, he said, as always, we will wait and see. That was a funny moment in the live stream because I paused it to say, wow, that's a hard-hitting question. And then even the reporter laughed when he said wait and see, because it's so comical, because that is always the way it is. But we also must understand the position of the federal chairman. He can't really say anything too out of the borders, or else he could really either spook the markets or really boost the markets off of expectations that may not be true. So with that, there was all of that. There was talks about, you know, inflation, oil. They look like they're going to keep the rates right around the same spot, right around 3.5 to 3 forever. It looks like they're never going to change it. And then also the big bomb that dropped when we initially saw the markets start to drop, and they continued to drop throughout the meeting. Again, it was kind of a hawkish meeting. It was really not positive. It was great to see this meeting that the Fed is just pausing, not doing any hikes. But with that, it's like as the meeting went on, things got more and more hawkish. And the initial hawkish catalyst was Jerome Powell saying that even when he gets replaced as the federal chairman, he may still stay on the board. I know there is not a lot that are going to want to see that. Many want to see Jerome Powell finally leave, get him out of here, but he is looking like he may still stay on the committee, saying even if there is not a federal chairman appointed by May, he will stay as the chairman. Also, there was just a lot of talk about uncertainty. Even Jerome Powell said if there was ever a meeting to not have the SEP, it would be this. We just recently came out of a lot of that government shutdown with a lot of delayed data. Now we have the uncertainty out in the Middle East, and overall, it's just like when it comes to everything that Jerome Powell said, again, nothing new, different day, same overall story. And that is just that they're going to remain data dependent. Overall, this was not the worst FOMC decision I have ever seen. You know, I have seen before the federal chairman come out and really spook the markets even worse, especially when we have had rate hikes in the past. Rate hikes, usually not a positive for the stock market, but overall, the downside wasn't too bad. So I don't expect for much movement here the rest of the day, but I do believe the markets will get through this. Overall, I am more bullish than bearish on the markets, contradicting what the fear and greed index says, which is right now that we are in extreme fear. Just for today, for the rest of the day, because we got a little bit of time until the market closes. Well, I guess we are in power hour now, so we got about 30 minutes left. So the last 30 minutes could be pretty volatile, just like the first 30 minutes of the day. Let's see if we get a reversal. You know, maybe the markets will just eat up that news and push once again. It wasn't the worst news overall. It was just basically, again, what we expect from Jerome Powell, that nothing is going to change. We'll see if at the next meeting in April, if anything does change. Also, there was a question about rate hikes, which Jerome Powell said is not totally off of the table. Some of the people asking questions do not belong in the room. Well, they got there somehow, and I think it would be really cool to be there. And some softball questions. Yeah, I liked the one question. I thought a kind of a hard-hitting question, the one where he asked if Jerome Powell would stay. That was hard hitting. And then also the one talking about the pressure on the consumers, which Jerome Powell said, it's, things are okay right now. Things aren't that bad and everything, but he doesn't know the pressures that some are facing. One valid thing that Jerome Powell did say was the rising insurance costs, because insurance has risen like crazy, and insurance is a scam in itself, basically, because it's like you never use them, right? You pay this rate every single month, and then the one time you do use them, now you get penalized by paying a higher rate every single month. Basically like pay me, and if you do have to pay me, I'm going to make your life as hard as possible. I'm only going to give you a portion of the actual cost of whatever it is, whether it's medical, auto, whatever. Insurance is such a ruse, one of my biggest costs with my business. But here we are in power hour. Let's see if we see some type of oversold reversal, or if there are any good trades here for just the last 30 minutes of the day. Again, everybody who was here, I really appreciate you for being here in the live stream. I know some of that was kind of boring with the lawyer talk and the economic talk that we got at the press conference, but again, a lot in between the lines. And overall, I believe that it is pretty interesting. But this was my first time doing a live FOMC. I've watched many of them, but this was my first time going live, and I would say that this was a successful time. We got up to, at one point, I believe like 18 viewers, so that was pretty good. Right now, there are just 5 of you. I know some of you have been watching the whole stream, 2 wheels, so thank you for being here once again. We are here in power hour, so the last 30 minutes of the day. Let's see if we see any type of reversal anywhere, or if the bleeding in the markets continue. Let's look here at the 1-minute time frame with Circle Internet Group. So kind of right here in the middle. When it comes to trading, not the most favorable oversold reversal, but also Circle Internet Group actually decently strong today compared to some of the markets, still in the green. Let's take a look at Hims and Hers Health. Let's see if there's anything going on with this play or if there's a great setup. So right now it is descending. Maybe if we start to see a reversal once it goes to the right side of the V, maybe not a bad trade. But overall, like all of today, I didn't really do any trading within the markets. I'm probably not going to place a trade here in the last 30 minutes, but that is okay because I will wait for my opportunity unless we see some type of crazy reversal here in the last 30 minutes in Power Hour going into the overnight session. But everybody, successful stream. Once again, the federal chairman remaining data dependent, the Federal Reserve not cutting rates, not hiking rates, but just doing exactly what was expected. There was a 0% projection going into today, and well, the Fed did exactly what was projected. Let's just take a look really quick going into April, what the projections look like. Currently, this is going to be 41 days from now, and right now, a expectation of a no change, 97% probability. And again, that's a good probability with everything that Jerome Powell said. But we'll see the type of pressure that oil puts on the markets. We'll see if inflation continues to roar higher. Let's see if we go lower on the fear and greed index and higher on the VIX. Very interesting times that we live in. Let's see if the president has said anything about Jerome Powell now that the meeting is up. No, he hasn't said anything yet, but I'm sure he will at some point. But overall, Jerome Powell disappointing the markets once again, like normal. No, nothing surprising there. Those are the projections going on for the longer term. They look like nothing will ever change. I don't believe that will be the case. I think a very likely scenario right now with where we're at and how Jerome Powell and the Federal Reserve is doing things, and with everything going on in the Middle East, we may very well see that Fed put, Powell put, or Warsh put once he gets into the place of Jerome Powell, which is where we start to see the rates really come down and we really see some QE. It's crazy the amount of pressure that is on the economy right now with just a 3.5 rate. And, that is just because of how much everything has gotten messed up since COVID. COVID was a crazy time. Them cutting the rates down to zero really did spark inflation. Assets went to the moon. So many other things went to the moon, and inflation has still been roaring. It's gotten a little bit more tamed compared to where it was in the last years. 2022, 2023 were pretty crazy. Things have been a bit more tamed, but the pressures are still really there, especially with what is happening with oil right now. You can always count on everyone out in Washington to make your life harder. And then the other person that will make your life harder is the IRS. But that's not to say that I am negative. I'm super positive. I am still very bullish on the markets. I still wore the bullish tie today, and I do expect for there to be some QE once again. I do believe we will get some rate cuts. When we look at what the Fed always says with all of these meetings, it basically goes just like today, unless you do see the Fed put or they really have to save the markets. Normally, it is this exact same story. The Fed will often disappoint the markets, often give very weak expectations. But I just want to remind investors, we got one more rate cut than was expected in 2025. At the end of 2024, they were saying that we were just going to get 2 rate cuts. We ended up getting 3, and we will have a new federal chairman in the place of Jerome Powell in May, most likely. But let's also remember that the Federal Reserve is a committee, so there are many members on the board, and Jerome Powell maybe not leaving, the Federal Reserve still staying on the board, and that was what initially started to cause some of that bleeding, some of that volatility that we are so used to with the FOMC meetings. I currently pay nothing. I live in a 2024 Peterbilt. Oh yeah, that's awesome. And then but I have no mortgage. Yeah. So anyway, guys, that was the FOMC decision. We'll see here. I'm just going to take a look here one more time on my phone, see if I see anything worth trading. Maybe if I find a trade here in the last 30 minutes, I will just stay live until that trade, see if there's anything. But really, just last 30 minutes of the day, I am not expecting too much. It's funny, I have one charger here. I'm low battery on my phone. I'm low battery on my computer. This stream has taken a lot of my battery. Let's see. Let's take a look here at Quantum. Just not really a lot in play right now, but volatility still present in the markets, but expectations are shot. So I'm not expecting too much here. If anything, I'm going to look for a solid oversold reversal, but most of the technicals here aren't really meeting my criterias, to be honest with you. So probably going to pass here on a trade in the after hours. Just not too much going on. Maybe we'll see an oversold reversal here, though. If we do start to see the indexes start to push back up, that would be a positive. We could see some more volatility in the markets. Again, these days with the Fed are full of volatility. I mean, we are close to an oversold reversal here, but I really do want to see that right side of the V if I'm going to make a small trade here. Let's take a look here. HIMS, still at that same position. Let's see if we get if the bulls could take control of the markets. Again, not really a positive catalyst from the Fed, though, and the markets do move a lot off of the news. And so when we do talk about the news right now, the Fed did not really say anything that is too positive that would really make the markets turn around here, in my belief. But we are sitting in an interesting spot here in terms of technical analysis on a couple of different plays. But just know that if you are going to place a trade, I'm not telling you to copy what I am doing here. This is never financial advice, just my opinion. And I'm saying right now that I probably won't even be placing a trade, because although the technicals are kind of lining up decently, it's not like a ton of strength. It's not like we're seeing an oversold reversal here and then like a massive green candlestick, at least yet. That's why I say I'm like waiting for that right side of the V to really see if the momentum can surge into the markets. The oversold reversal is one of my favorite things to play in the market, but also it is definitely, in my opinion, again, never financial advice, important to have some patience with that trade, because many times you will be descending on the candlestick chart, on the relative strength index, and on the MACD, and then it will look like you're going to have that oversold reversal, but it does just end up being a fake out. So one of my favorite setups, but still volatility with it. Still, it could trap a lot of bulls, especially when the macros aren't really too positive. And the macros today, the main news today, what we just went through with the Federal Reserve, and nothing from Jerome Powell was really too positive. Pretty hawkish overall, especially saying that he may just as well be, still be with the Federal Reserve. So here on the 1 minute and the 5 minute, things are looking pretty decent for him. So I may be looking to place a trade here, but now we are into the last 20 minutes of the day. So we'll just see if there's some type of reversal. And this will, again, be a very short day trade, just trying to catch some momentum. That's why we're doing these lives. We're practicing for when we are eventually going live every single day. We're going to be doing a lot of day trading in the markets. But with that, those streams may last 30 minutes at times. They may last 8 hours, because sometimes with trading, what is so fun is sometimes you may make the most of your money right at the beginning of the day. The markets are most volatile at the beginning of the day and in the last 30 minutes. And other times you may be sitting at the computer waiting 5 hours to place a trade, or maybe till the end of the day. We may be seeing a bullish reversal, but again, I am not counting on it. That is why I have yet to place a trade. But trading is such an interesting game. It's a lot about psychology, a lot about decision making. When it does come to trading, many will get trapped by trying to get into a trade too early. Again, the technicals right here, and this is just on a day chart, 5 minute and 1 minute look pretty decent here for Hims and Hers Health, but I am not totally convinced that we'll get a turnaround, especially with what we just had with the FOMC meeting. Home Depot is dropping. Two Wheels, again, hey, Two Wheels, thank you again for spending your time here on the stream. And to everybody else who is here, you guys have been with me for a lot of the stream. We've had a consistent 6 to 12 viewers today. So for everyone who is here, thank you for spending your time with me. I absolutely love doing this. These live streams are so fun, and I never feel more alive than when I go live. Even though Jerome Powell could be a bit boring, it's kind of like watching watching paint dry, there was some interesting things said within that meeting. Let's take a look here at the major indexes. Let's see if we're seeing any type of reversal here. Both are descending again. It has been a pretty bloody day overall. The bears have taken control throughout the day, from the initial news of the PPI headline and then to the Federal Reserve causing more downside. And this is what I was saying in yesterday's video. You know, will the rally continue? We had a strong 2-day rally in the markets, but I was saying, you know, this could be a fake out. There could be a reversal coming, and just to watch for today, because with the FOMC decisions and with Jerome Powell, there is always a lot of volatility. And so if you did get into the markets last night feeling some fear of missing out when things were ripping in the after hours, such a shame for those, because the markets took it right back. A pretty decent opportunity if anybody did enter into a short, though, because all the gains that were made all the way back from March 16th, so at the beginning of the week since Monday, were all eaten up by Wednesday, and things could get worse this week as we do have a lot of OPEX on Friday. We have a lot of options expiring, a lot of investors loaded up for this decision. You know, things have been very bloody for a while. So I could see the volatility continuing. I could see the possibility of some green tomorrow if we do get a bit of a relief rally or some short covering, but I do believe that Friday could be bloody once again. Home Depot right now is descending. Let's go back to the one I was possibly looking at trading, which is Hims and Hers Health. Okay, it looks like we might be seeing an oversold reversal here. We have 2 green candlesticks here. I would like to see this candlestick finish green, and then again, maybe make a short-term trade here. And I'm not expecting much. I'm not saying that this is going to be an amazing trade or anything like that. I'm just saying that, you know, there is some possibility for some gains to be made, literally like a quick 5 to 10 minute trade. But I want to see us get to a 3rd green candlestick. Can we close here with 2 greens on a potential oversold reversal? Again, I am having some patience. And if you are going to trade, you know, if you are under that $25,000 mark and don't have unlimited day trades, I would say this really is not the best trade either. I'm just looking for a short-term gain here if there is anything to be had. But again, we've had some very negative news today with the Federal Reserve. Things are not looking that bullish. You know, volatility in the markets today towards the downside. The bears have had control. And yeah, right now the price action in Hims and Hers Health is looking pretty weak. I don't believe that we are going to see that beautiful oversold reversal, possibly just the ABC pattern. Look at this right here. And this is just on a 1 day, right? We're not looking at long-term technical analysis. This is just some day trading, but we got rejected here, descended, got rejected. And this is why, again, it is very important to wait, because look at this right here. If we were just looking here at 12 o'clock, you know, this right here may be looking like an oversold reversal. You know, the candlesticks are rising. We're starting to see a jump on the RSI, and the MACD does look like it's getting closer, but then it does disappoint on investors. Let's take a look at some other plays here. Let's take a look at Robinhood. Robinhood